If you think trading profits are only for geniuses, insiders, or people with years of experience, stop right here. That belief is the very thing keeping beginners broke. The market does not reward confidence, intelligence, or speed. It rewards behavior, and behavior is something you can control from day one. Here's the truth most beginners never heard before. You don't need to predict the market to make money. You need to respond to it correctly. Most beginners lose not because they're new, but because they rush. They want results before they earn understanding. They trade with hope instead of structure, emotion instead of rules. But profitability doesn't come from being right often. It comes from being wrong properly. A beginner who knows how to lose small already plays a professional game. Think of trading like following a simple cooking recipe. A beginner doesn't ruin a dish because they lack talent. They ruin it by turning the heat to high, skipping steps, or constantly lifting the lid to check. Profitable trading works the same way. The recipe is simple: controlled risk, patience, and consistency. The problem is not complexity. The problem is impatience. You don't need 10 strategies. You don't need perfect entries. You don't need to trade every day. What you need is respect for the process. One setup, one risk rule, one reason to enter, one reason to exit. When beginners fail, it's not because the market is hard. It's because they refuse to stay boring long enough to let discipline work. The market doesn't care that you're new. It doesn't punish beginners for being beginners. It punishes anyone, new or experienced, who trades without structure. And the good news: structure is learnable, calm is trainable, consistency is built. Profit in trading doesn't come from doing more. It comes from doing less, better. If you can control yourself before trying to control money, the market will eventually do something rare for a beginner. It will respect you back. 1. Stop trying to win. Learn how not to lose. Most beginners enter trading with excitement and urgency. Charts look alive, candles move fast, and the mind whispers one dangerous question: how fast can I make money? That question feels natural, but it quietly sets a trap, because the market does not reward speed. It rewards control. Professional traders don't survive because they win more trades. They survive because they lose correctly. Beginners see losses as proof they're bad at trading, so they fight the market, move stop losses, or enter another trade immediately to recover what was lost. But the truth is simple and uncomfortable. Losses are part of the job. What destroys beginners isn't losing. It's losing without rules. Here is the shift that changes everything. Your first responsibility is not to grow your account. Your first responsibility is to protect it. Profit is not something you chase. Profit is something that appears when protection is consistent. Think of trading like learning to drive on a long mountain road at night. A beginner presses the accelerator, focused on reaching the destination quickly, ignoring the sharp curves ahead. A professional focuses on the brakes. They understand that controlling speed is what keeps the car on the road. In trading, risk management is your brakes. Without it, every volatile move becomes a potential crash. When you risk too much, your emotions take control. Fear tightens your chest. Hope convinces you to hold losing trades. One mistake turns into revenge trading. Another trade is taken not because it's a good setup, but because you want to feel relief. This is how most accounts die. Not in one dramatic loss, but through repeated emotional decisions made under pressure. But something powerful happens when you reduce your risk. Your mind becomes quiet. You stop watching every candle. You stop begging the trade to work. And when you don't need the trade, you finally gain the ability to follow your plan. Discipline stops feeling forced. It becomes natural. Your first stage as a trader is not about confidence. Confidence comes later. This stage is about humility, accepting that being wrong is normal, accepting that small losses are proof of discipline, not weakness, accepting that one trade means nothing, but a series of controlled decisions shapes everything. The market will always be here tomorrow. Your capital might not, unless you respect it. Survive first, learn second, grow last. Master this principle early, and you won't just avoid blowing accounts. You'll build something rare among beginners: trust in yourself. And once that trust exists, profitability stops being a dream and starts becoming inevitable. 2. Patience is a skill, not a personality trait. Most beginners believe patience is something you either have or you don't. They say, "I'm just not patient," as if that explains every loss they've taken. But in trading, patience is not a personality trait. It is a trained skill. And like any real skill, it feels uncomfortable before it becomes powerful. The market constantly pressures beginners to act. Candles move, prices spike, red turns green, green turns red. The screen creates the illusion that opportunity is everywhere and happening right now. This illusion is dangerous. It convinces beginners that if they are not in a trade, they are falling behind. But the market does not reward participation. It rewards timing. Most losing trades are not caused by bad strategies. They are caused by impatience. Entering before confirmation. Entering because price looks like it wants to move. Entering because waiting feels like wasting time. Fear of missing out quietly pushes beginners into low-quality trades, and those trades slowly drain both capital and confidence. Think of trading like standing at a crossroads with traffic lights. A beginner moves every time the road looks clear. Even if the light is red, sometimes they get through. Other times, they crash. A professional waits for the green light, no matter how long it takes. They understand that one clean move beats 10 risky ones. In trading, confirmation is your green light. When you rush into trades, emotions take control. You stop following your plan and start negotiating with the market. You hold losing trades longer than planned. You take profits early out of fear. Over time, confusion replaces clarity. You begin to think the strategy is broken, when in reality, you never gave it the conditions it needed to work. But when you wait for proper setups, something changes internally. Your mind becomes quieter. You stop chasing candles. You stop needing the trade to work. Detachment replaces urgency. This is the moment trading shifts from emotional reaction to controlled execution. Patience is also self-respect. It is saying, "I value my capital enough to wait." Professionals do not feel bored while waiting. They feel protected. Every trade they skip is risk avoided. Every hour they wait is emotional energy preserved. At first, patience feels painful. Your hand hovers over the cursor. Your mind creates excuses to enter. But each time you wait, you strengthen discipline. Over time, waiting becomes easier than forcing. The market rewards those who can sit calmly while others rush. Patience is not passive. It is precision. 3. Discipline is doing the same right thing, even when you're emotional. Most beginners believe discipline means forcing themselves to trade perfectly. They think discipline is about willpower, motivation, or feeling strong every day. But in trading, discipline is something much quieter and much harder. Doing the same right thing, even when your emotions are loud. The market will test you emotionally before it ever rewards you financially. Wins make you feel invincible. Losses make you feel doubted. After a loss, the urge to make it back appears. After a win, the urge to trade bigger follows. Discipline is what stands between these emotions and your cursor. Many traders fail not because they don't know what to do, but because they abandon their rules in emotional moments. They move stop losses. They skip confirmations. They take trades they promised themselves they wouldn't. Over time, rules become suggestions, and suggestions become habits. This is where consistency dies. Think of discipline like flying a plane through turbulence. A beginner pilot panics, grabbing the controls, overcorrecting every shake. A professional trusts the instruments. They don't react to every movement. They follow procedure. In trading, your rules are your instruments. When emotions shake you, discipline is trusting the system you already defined. Discipline is deciding your risk before the trade, not after fear appears. It's taking the same setup whether you won yesterday or lost 3 times in a row. It's understanding that your edge only works when applied consistently, not selectively. The market does not reward intelligence. It rewards repetition. This is why discipline feels boring. There is no excitement in following rules. There is no ego boost in small wins. But boredom is a sign you're doing it right. Chaos is expensive. Calm is profitable. At first, discipline feels restrictive. Your mind wants freedom to improvise. But structure is what frees you from emotional decision-making. When rules are clear, There is nothing to debate. You either execute or you don't. And over time, this removes stress. You stop blaming yourself. You stop blaming the market. You simply review execution. Discipline builds trust. Trust in your system. Trust in your process. Trust in yourself. And once that trust exists, confidence grows naturally. Not the loud kind. The quiet kind that doesn't need to prove anything. The market doesn't care how motivated you feel. It doesn't care how confident you sound. It responds only to what you repeatedly do. Discipline is not intensity. It is consistency. And consistency is what turns effort into results. 4. Consistency is what turns small wins into something bigger. Most beginners believe success in trading comes from one big trade, one perfect entry, one massive win that changes everything. But this belief quietly sabotages progress, because trading success is not built on moments, it is built on repetition. Consistency is not exciting. It doesn't feel powerful in the beginning. In fact, it often feels slow, unimpressive, and even pointless. Taking the same setup again and again, risking the same small amount, following the same rules. It feels like nothing is happening. But this is exactly where most beginners quit, right before consistency begins to work. The market does not reward intensity. It rewards reliability. Anyone can follow rules for a day. Anyone can stay disciplined for a week. Very few can do it over months without emotional shortcuts. And that gap is where the difference is made. Think of consistency like dripping water onto a stone. 1 drop does nothing. 10 drops do nothing. Even 100 drops seem useless. But over time, the stone changes shape. Not because the water is strong, but because it is consistent. Trading works the same way. Small, controlled actions repeated over time reshape your results. Beginners often break consistency after losses. They change strategies too quickly. They adjust rules after one bad day. They look for something new instead of giving something time. But consistency requires patience with the process, not just patience with the market. You must allow your edge to play out across many trades, not judge it based on a few outcomes. Consistency also protects your mindset. When you trade the same way every time, results stop feeling personal. Wins don't inflate your ego. Losses don't destroy your confidence. You stop asking, "Why did this happen?" and start asking, "Did I execute correctly?" That shift changes everything. At first, consistency feels restrictive. It feels like you're limiting your potential. But in reality, consistency is what unlocks it. When your behavior is stable, your data becomes reliable. When your data is reliable, improvement becomes clear. And when improvement is clear, confidence grows naturally. The market doesn't need you to be perfect. It needs you to be repeatable. Over time, repetition builds rhythm. Rhythm builds trust. Trust builds growth. Consistency is not about doing more. It is about doing the same right thing, long enough for it to matter. And once it does, results stop feeling random. They start feeling earned. 5. Emotional control is what keeps you standing during drawdowns. Every trader dreams about winning streaks, but the market doesn't reveal who you are during wins. It reveals you during drawdowns. This is where most beginners break, not because the strategy stops working, but because emotions quietly take over. Losses feel heavier than wins feel good. After a few losing trades, doubt creeps in. You start questioning your setup. You change rules. You reduce patience. You increase risk at the worst possible time. This emotional spiral is not a lack of skill. It is a lack of emotional control. The markets will always include uncertainty. No setup works every time. No edge avoids drawdowns. Emotional control is what allows you to stay rational when results temporarily turn against you. Without it, even a good strategy becomes dangerous in your hands. Think of trading like sailing across open water. Calm days are easy. Anyone can sail when the sea is smooth, but storms are inevitable. A beginner panics, fighting the waves, overcorrecting every movement. A skilled sailor adjusts the sails, keeps direction, and trusts the structure of the boat. In trading, your rules are the boat. Emotional control is staying steady while the storm passes. When emotions run unchecked, decisions become reactive. You exit early to avoid pain. You enter randomly to feel hope. You stop following your plan and start following your feelings. This is how small drawdowns turn into account damage, not because the market is cruel, but because emotions are untrained. Emotional control doesn't mean suppressing feelings. It means acknowledging them without obeying them. Fear can exist while discipline stays intact. Doubt can appear while execution remains clean. Professionals don't trade without emotion. They trade without letting emotion decide. Drawdowns are not a signal to panic. They are a signal to observe. Are you executing correctly? Are you following your rules? If yes, then your job is patience. If not, your job is correction, not revenge. Over time, emotional control builds resilience. Losses stop shaking your confidence. Wins stop inflating your ego. Trading becomes neutral, almost quiet. This is not boredom. It is stability. And stability is what allows longevity. The market doesn't reward emotional intensity. It rewards emotional steadiness. If you can stay calm while others collapse, you gain something far more valuable than one winning trade. You gain endurance. And in trading, endurance is what keeps you alive long enough for success to find you. 6. Trusting the process when results lag behind effort. One of the hardest moments in trading is not losing. It's doing everything right and still seeing slow or negative results. This is where most beginners quietly give up. They think effort should be rewarded immediately. They believe correct behavior should instantly translate into profit. But the market doesn't work on emotional timelines. It works on probabilities over time. There will be phases where you follow your rules perfectly, manage risk well, stay patient, and still see little progress. This creates doubt. You start asking yourself if the strategy really works, if you're wasting time, if something else would be faster. But this moment is not failure. It is testing your commitment. Think of trading like planting seeds in dry soil. You prepare the ground, plant carefully, and water consistently. Days pass, and nothing breaks the surface. A beginner digs the seeds up to check if they're working. A professional keeps watering. They understand growth happens underground first. In trading, your discipline grows before your results show. The market delays rewards on purpose, not to punish you, but to remove those who rely on motivation instead of structure. When results lag, emotions get louder. Impatience pushes you to change rules. Frustration pushes you to overtrade. Comparison pushes you to abandon your plan. But consistency during quiet periods is what separates those who last from those who disappear. Trusting the process doesn't mean blind faith. It means trusting execution over outcome. You judge success by whether you followed your rules, not by whether the trade won. This mindset shift removes pressure. It turns every trade into practice instead of judgment. Most beginners quit right before the process starts paying. They don't fail because they were wrong. They fail because they didn't stay long enough for probability to work. Trading edges are subtle. They reveal themselves slowly, quietly, over many repetitions. When you stop demanding immediate validation, you gain control. You stop needing the market to prove anything to you. You focus on showing up the same way, trade after trade. This is where confidence becomes stable, not emotional. The market doesn't reward impatience. It rewards persistence without desperation. Trust the work you're doing now, even when results are silent, because when the process finally surfaces, it doesn't arrive loudly. It arrives consistently, and consistency is what turns effort into outcome. 7. Think in years, not trades. Most beginners measure success one trade at a time. One win feels like proof. One loss feels like failure. This short-term focus creates emotional swings that mirror the market itself. But profitable traders don't think in trades. They think in years. They understand that trading is not a momentary opportunity. It is a long-term practice. When you focus on individual trades, every outcome feels heavy. You attach your identity to results. You feel smart after wins and incapable after losses. This mindset creates pressure, and pressure leads to mistakes. The market becomes something you fight instead of something you work with. Think of trading like training for a marathon. No runner judges their progress after one workout. Some days feel strong, others feel slow, and some feel painful. Progress is measured over months of consistent training, not one run. Trading works the same way. One trade is just one step in a much longer race. Short-term thinking pushes beginners to overtrade. They try to fix results immediately. They increase size too early. They abandon good habits because they want faster proof. Long-term thinking does the opposite. It allows patience. It allows losses without panic. It allows learning without emotional damage. When you think in years, drawdowns stop feeling threatening. They become expected. You understand that no edge produces a straight equity line. You stop asking, "Why am I losing right now?" and start asking, "Am I executing well over time?" This shift protects both capital and mindset. Long-term thinking also builds resilience. You stop comparing yourself to others. You stop rushing to catch moves you weren't meant to take. You focus on becoming consistent, not impressive. And consistency compounds quietly. Most traders don't fail because they lack ability. They fail because they run out of patience before progress appears. They quit during normal fluctuations, mistaking them for personal shortcomings. But those who stay, who show up year after year with controlled behavior, eventually reach a level where results feel steady instead of emotional. The market does not reward urgency. It rewards endurance. When you stop trying to win today and start building for the future, pressure fades, decisions become clearer, execution becomes cleaner, trading turns from stress into structure. Think long-term, trade small, stay consistent, because in trading, the real advantage is not speed, it's staying power. 8. Simplicity is what keeps you profitable. Most beginners believe improvement means adding more indicators, more strategies, more trades. They assume complexity equals skill. But in trading, complexity usually hides uncertainty. The more confused you feel, the more tools you add. And the more tools you add, the harder it becomes to execute with clarity. Profitable traders move in the opposite direction. As they gain experience, they remove things. They simplify entries. They simplify rules. They simplify decisions. Not because they know less, but because they finally understand what actually matters. The market already has enough noise. Every candle carries information, distraction, and temptation. When your system is complicated, your mind becomes overloaded. You hesitate. You second guess. You miss good trades and enter bad ones late. Simplicity reduces friction between thought and action. Think of trading like sharpening a blade. A beginner keeps adding metal. Thinking weight creates power. A professional removes material carefully until the edge is clean and sharp. The blade becomes effective not because it is bigger, but because it is precise. Your trading system works the same way. Fewer rules, clearly defined, cut deeper than a complicated strategy. You can't execute consistently. Simplicity also protects discipline. When rules are clear, execution becomes easier. You don't negotiate with yourself. You don't search for confirmation after the fact. You either have a setup or you don't. This clarity reduces emotional fatigue, which is one of the silent killers of consistency. Many beginners keep changing strategies, not because the strategy failed, but because they never mastered it. They confuse learning with switching, but mastery requires repetition under the same conditions. Simplicity allows repetition. Repetition builds confidence. Confidence allows calm execution. Simplicity doesn't mean trading blindly. It means understanding deeply what you're doing and why. It means knowing exactly what you're waiting for and exactly what makes you exit. When everything is clear, emotions lose leverage. Fear has less room to interfere. As your trading becomes simpler, your thinking becomes quieter. You stop chasing. You stop forcing. You start observing. This is where patience, discipline, and consistency finally align. The market does not reward complexity. It rewards clarity. When you strip trading down to what truly works, results stop feeling random. You gain control, not over the market, but over yourself. And that is the highest level a trader can reach. Simplicity is not weakness. It is mastery. If you're still here, listening to this, let that sink in for a moment. Most people don't stay. They skip, rush, or look for shortcuts. You didn't. And in trading, That behavior alone already puts you ahead of the majority who never last long enough to understand what this journey truly demands. Trading is not just about charts or strategies. It's a conversation between you and uncertainty. Every trade reflects your patience. Every loss reveals your discipline. Every decision shows how well you can control yourself when nothing is guaranteed. The market doesn't test your intelligence first. It tests your behavior. Many people come to trading chasing freedom, but real freedom in trading doesn't start with money. It starts with control. Control over risk. Control over emotions. Control over expectations. Without that, profit only magnifies mistakes. With it, even small accounts begin to grow in a healthy way. Everything you've learned here points to one truth. Trading rewards those who respect the process. Protecting capital matters more than chasing wins. Patience must be trained. Discipline must be repeated. Consistency must be boring. Drawdowns must be survived. Trust must be built slowly. And simplicity must be embraced. Think of trading like climbing a long mountain trail. You don't see the peak from the start. You only see the next few steps. A beginner looks up, feels overwhelmed, and quits. A committed trader focuses on the next step only, trusting that elevation comes gradually. Trading works the same way. You don't need to see success clearly. You need to keep walking correctly. Progress in trading is often invisible before it becomes obvious. It shows up in calmer reactions, smaller losses, fewer impulsive trades, better decisions under pressure. These changes don't feel exciting, but they are the foundation of everything that lasts. If this video helped you slow down, think deeper, or see trading differently, support this message. Hit like. It helps this reach traders who need clarity. Share it with someone who's rushing or close to giving up. And subscribe if you want more content focused on mindset, discipline, and long-term trading growth, not hype. The market will still be here tomorrow. Your job is not to catch every move. Your job is to become the kind of trader who can survive long enough to grow. Trade patiently. Think long-term. Protect your capital. And remember, profit is not something you chase. It's something that comes after you master yourself.